G'day, Ryan. How are you, mate?
Hey Greg, good. How are you?
Very well. Today, the reason why I wanted to have a chat with you for the Insider today, we've spoken a number of times in the past few months about this new world of blockchain technology and this new financial system that's growing up. And today, I'm really pleased to announce to everyone that we are launching for what is, I guess, a first in our company's history. In that two of us or two editors are working on the one product, and we've got a new service called New Money Investor. And I just wanted to, I guess, explain it a little bit more, let everyone know how we came about to getting this idea, and how we came to be working together. So let me start briefly by saying that you're clearly the expert in the area of cryptocurrencies and blockchains. But sometimes I think an expert needs an ignoramus to join them and ask the questions that maybe everyone else is wondering about as well. And I'm
Yeah.
happily the ignoramus in this instance. So maybe if you want to just give viewers a bit of a background on how we came to be here, because it's been a journey over the past 6 to 9 months, I would say.
Yeah, so we probably started talking about it mid last year. Obviously, as everyone will recall, we're in the midst of a pandemic, and we have a lot of discussions with the editors here at work, and we're in the midst of this, once in a century pandemic where the whole global economy is shut down, and then at the same time you've got a roaring stock market moving to new highs. You've got I obviously have a number of speculative small cap services. I've never had a better year in terms of their returns. Property prices have gone nuts. And you think about that, you put those two things together, an economy that is literally in the toilet, you couldn't get any worse, global trade shut down, and yet you've got asset markets going to new highs. And we obviously talked about this and looked at this, and we've been looking at it probably independently for a number of years and said there's something not right about the way the world is working. And you can make money being ignorant of that still. You can trade, you can invest in small caps, you can do other stuff and still make money. But there's a piece of the jigsaw that no one's putting together that explains, well, what is actually happening here? And over the conversations and research we've both done, the obvious answer was that money itself is at the root of this divergence between markets and the real economy. And that led to a lot of discussions about, well, what is money and how does it work in the current system we've got? And that's a huge topic. That's, the history of money is, thousands of years, and it's taken us from a number of different systems. But the pace of that change of money, it does happen. People don't realize it, but it happens so slowly that most people don't recognize it when it happens in their own lifetime. I mean, the last big change we got in money was when we came off the gold standard finally, once and for all, in the 1970s, early 70s under Nixon, where we moved to a pure fiat-based money, which relied on the primacy of the US dollar, and that itself was tied to the price of oil. So that was the last time there was a big change. And I reckon people at the time probably didn't realize how big a change that was either. But if you take that moment and you look at the world, the way the world's developed through that lens, you can see how that's led to lots of different things. The Gulf Wars in more recent times, the ructions in the Middle East, geopolitics. A lot of things have come from how money changed in that moment, and investment opportunities as well. And it seems to us last year really highlighted the fact that that system of money that we've lived in for at least the last 5 decades is actually pretty much broken, and it is falling apart. And you can see that in other ways. You can see that with the Federal Reserve money printing. You can see that with negative interest rates. You can see that with the divergence of asset values to the real economy. So everyone understands this. And our challenge was to come up with a service which explained this, and then tried to work out where the world was heading to as well. So there's no point in just explaining that money's changing and the Federal Reserve is corrupt, or and what can we do about it? At the end of the day, we're going to change into something else, and that's what we think will happen. We're going to change to a new form of money. Now, to understand what that money could be, it could be a number of things. It could be a basket of currencies like the Bancor system that Keynes came up with in the 1940s. It could be a commodity-based money. It could be a return to gold. Or it could be technology-based money, which is what cryptocurrencies are, that rely on advances in technology, and in my mind at least are the correct type of currency for the digital age we live in. So we're going to try in the service, I think, explain what's happening, what is happening, and then also what is going to happen. And I think if we can marry up those three things, we're going to make our subscribers and people, investors basically, that use the service, be able to navigate what's actually really happening behind the scenes a lot more. Because, you know, we deal with certain editors who are nameless, who look at the system and just think it's going to break and it's going to collapse. But they're not seeing the picture where it might not collapse if money is the fall guy in the situation. Money will be the sacrificial lamb, not asset values. And if money's the sacrificial lamb, it needs to change into something else. And I think that's the really exciting story we're going to try and cover, but yet still come up with tangible investing ideas at the end of that. And in my opinion, cryptocurrencies will be a huge part of that.
It's funny you mentioned that, because it reminds me, about 10 years ago, a book was doing the rounds called When Money Dies, and it was written by, I think, a guy, Adam Ferguson, if I'm remembering right. Yeah. Was a British author, and it was effectively a history of the Weimar Republic and the hyperinflation that Germany suffered after World War One. But what happened in the Weimar Republic is the stock market went crazy. Everything went up. It was money. When money dies, everything goes up in relation to that denominator. And for me, coming from the, I guess, you know, I've sort of self-deprecatingly called it the ignoramus point of view, and I think it's right in many ways. I was a skeptic of cryptocurrencies and Bitcoin, and I'm still understanding it. But it was post that pandemic last year when all that money was put into the economy, and it was the first time I realized that to hedge yourself against this destructive behavior by central banks and governments, it's not to own cash and wait for the system to collapse. It's not to be conservative in the way that you manage your fiat currency denominated wealth. It's to understand that it is the denominator that is the problem, and the denominator is what the system is wrapped up in. And in many ways, crypto and blockchain technology is the perfect hedge against this. And if you look at when the cryptocurrency prices really started to go nuts, it was around that time when all that stimulus money started flowing into the economy. Yeah. And it got to a point, and this is, you know, going back to conversations that I've had previously, and maybe even on the inside, I've said it's wrong to purely focus on price when you're discussing cryptocurrencies, because it can dilute the fact that there's something much more powerful going on. So let's just talk about Bitcoin, for example. To disclose, I'm probably the biggest fan of Bitcoin who doesn't actually own any. I'm still coming to grips with what the price should be and where it should be, and we are in price discovery phase. So, but the point is, the underlying technology has the potential to be hugely disruptive to the financial system. And if you look at the internet and the disruption that it has, it has cast across so many different industries all around the world, the financial system is probably the last man standing in terms of disruption. And cryptocurrencies have the ability, through distributed ledger technology, and if you don't know what that means specifically, you know, we go into all this stuff in the new money investor service, but it has the ability to disrupt the current financial system in ways that, you know, we can't even imagine at the moment. So for me, that last year was when I had that light bulb moment, when I realized that it's the technology, not just the price, that's the really important thing here. And in 10 years' time, it will be the dominant form of finance and the dominant form of commerce. So to me, it's hugely exciting. It's hugely interesting. And I know, and maybe you could just give the listeners a bit of brief background on your sort of crypto journey, because I know you've been in this space for many years. And whenever I've got any questions on how this works in the crypto world compared to the traditional financial world, like you're my go-to person. I'll be, you know, getting on the phone or sending you an email to say, hey, you know, tell me how this works. And I think, you know, that's how we want this interaction to work for people who decide that they want to get onto this service, is that I'll be the one asking lots of questions, and obviously people can send in questions themselves. Yeah. But I'll be hopefully the voice of the the inquisitive former skeptic who wants to know a little bit more about, the potential of this system and how it works, because it is a technology-based financial system. And for that reason, it can be a little bit confusing and a little bit daunting, but it's something that we certainly want to make a little less daunting for people as we continue the journey. So perhaps just give readers a brief background on your crypto journey, mate.
Yeah, no dramas. So something you touched upon there, which I probably just want to say first, is that the thing that confuses a lot of people about cryptocurrencies is the fact that they're not one thing. They can't be pigeonholed into being one thing. Yes, there's elements of it which is digital gold. Yeah, there's elements of it as an alternate currency. That's one aspect. There's other elements of it which fulfill reserve currency, not an actual day-to-day currency. But there's also elements of it that are actually just a pure internet protocol which decentralized transfers of value. Then there is sociological aspects you can look at it, or economic aspects. You can look at this crypto through a number of different lenses, and that trips a lot of people up because they look at it through one lens and they say, that doesn't make sense to me. It's not digital gold, it's not physical, and they forget about it from there. You need to sort of look at it through different lenses, and then you'll see it come together as this completely different thing that was never possible before. And that is a way to transfer value without a middleman. And that sounds so boring. Every time I say that to someone, their eyes glaze over. But it is a huge thing because it's never been possible to do that before. It's never possible to have a borrower and a lender meet up without having a bank in between them. It's never been possible for independent people to form an insurance pool themselves and insure themselves. It's never been possible for venture capital to be open to anyone in the world. It's never been possible to send money from anyone to anyone in 10 minutes without a middleman there for pennies. All that stuff has never been possible. And individually, those use cases might not seem, they're not, that's good, but is it great? But it's all those things and much more ideas we've not even thought about yet. So my journey on that,
I was just going to say, Ryan, if you think
about 2013-14, when ironically it was a boom period for Bitcoin where it went from $50 up to $1,000, and I got sucked in by that boom. It was actually an Irish guy, maths student I used to pick up on the way to soccer, a guy called Colin. I used to have to take him to soccer training, and he started telling me about this Bitcoin thing he was interested in. And so I looked into it and just got really interested in it. Saw people were making money, and I think I bought in around about $600, and that was my first Bitcoin purchase. And as tends to happen, I bought in on the end of a boom, and I experienced 2 years where the price went nowhere. I think it went down to about $150. But I was sold on the idea. The concept, even back then, to me was you needed a free market system for money. You needed to take away these middlemen. It didn't seem efficient to me to have middlemen in that system. So I've always been sold on that concept, probably because I believe in free markets anyway, but I saw the idea of why should money be in the control of centralized parties? It doesn't make sense. But that was a very unpopular idea. People at soccer training used to tell me to shut up about Bitcoin. I just got sick of hearing about it. A few of them probably wish they'd listened now, but it wasn't a popular idea because people were like, well, the current system works fine. It seems to work fine. And even though there'd been those big ructions in 2008 with the GFC, we seem to have got over it. But that's because no one really looked deep enough. They didn't look at the reason we've got over the GFC isn't because things have improved. If you actually adjust the stock markets and the property markets by money supply, we're actually been in a bear market for the last 12 years. We're nowhere near the highs we were in terms of asset valuations when you adjust for money supply. So when you adjust for all the new money that's been pumped into the system. The problem there is then, well, hang on. If someone can create money at will, then people who are closer to that fountain of money benefit more than people that are further away. And this is something people have always known and always suspected as a big problem behind fiat money. I think it was Isaac Newton who tried to discover the philosopher's stone, the secret of turning base metal into gold. And the fact that someone as smart as him couldn't led to the gold standard being adopted because, people a few hundred years ago were probably more cynical than us and they knew that people would corrupt the money supply if they could. With fiat, most people, especially in the Western world, have done all right. Outside the Western world, it's a different story. They'll be more aware of it. But in the Western world, most people have done all right. And it was only, say, last year when the pandemic hit that it became obvious to all that the monetary, something doesn't make sense. I don't think everyone's tied that together. But that's when it became obvious, in my opinion, that the monetary system was broken. And So you've had cryptocurrencies been around for 10 years and they've gone through various price cycles, but all the time the technology has been getting better. What you can do with it started with Bitcoin, but these days you can have more advanced things you can do. Importantly, you can do them in a decentralized way. So you can have smart contracts, which are self-executing contracts, which don't rely on a middleman. So that disrupts the legal profession, for example. It disrupts the accounting profession as well, because you don't need audits. Audit trails are actually embedded in the code. They're at the protocol level. So this technology has been getting better and better for the last, 10, 12 years. And last year, it really broke out in price. And it broke out in price because of the reaction by central banks to the crisis. And it just happens to be that the technology is at the pivotal moment where it's actually very useful for a lot of use cases now. And you're seeing that with the proliferation of use cases coming out at the moment. So it's been like a long journey for me. And I don't think it's been a journey where I was ever certain that Bitcoin would be part of the future. Probably until last year, where I become more certain than I've ever been. Because there was always that nagging doubt that I can see the value of it, and I can see how it's better, but there's an awful lot of entrenched interest to get over before you get to that point. But what seems to be happening now is the entrenched interest have basically shown their cards. They've said, we will do everything we can to keep the asset values up for us, and if that means sacrificing money, we'll do it. And they're essentially doing that. The only way they can save the current financial system is to basically let free markets come back, let interest rates rise, stop pumping money in, and let there be a collapse. And I don't think any central bank or government in the world is going to let that happen. So in a way, they're now at the stage where they're pushing people towards cryptocurrencies, especially in emerging economies. I've got subscribers in Argentina and Latin America who are very interested in this because they've seen their currency devalue 50% in a year. So yeah, it's definitely we're at a pivotal point now, but the important thing to remember is that technology that started, in 2008, 2009 has been improving every year. And a lot of the smartest minds in the world have come in, especially in the last 5-6 years, and basically been building real life applications on top of this. So I think that's at the stage we're at now.
Well, it's an interesting few points you've made there, and so the first one is the biggest criticism of Bitcoin or cryptocurrencies in general is surely governments will just be able to ban them or tax them out of existence, or there'll be some regulatory response. I think that's a bigger topic than what we have time for today, but it's certainly one that we will look at in depth in the service itself. The other thing you just touched on, I think, is really worth talking about. It's those price cycles that we've seen over the past few years. And from what I've heard, the big run up in crypto in 2017 got a lot of people interested in the space. And we're not talking about just financial speculators. We're talking about genuine computer scientists, engineers who thought, okay, the price is going up. What's the underlying technology here? And it was from that price spike that got a lot of smart people interested in the sector that are now applying that knowledge that they've learned over the past 4 or 5 years and are building these new use cases for it. And what you said previously about cutting out the middleman, it might be a topic that makes people's eyes glaze over, but sometimes you shouldn't mistake the simplicity or the boringness of something for the enormity of it either, because what crypto or what the blockchain technology does in removing the middleman, it creates value for the service that is doing the disrupting. So it disintermediates that value that held around the bankers or held around the brokers or the market makers or whoever it might be. That value has just distributed into the protocol builders. And the beautiful thing about this system is if you are involved in it and if you own the coins, you can share in that value dissemination. And that's, I guess, another part of it that we will be looking at with this service. Genuine money making ideas from this new money system that's unfolding, right?
Yeah, exactly. The funniest thing I've ever heard about cryptocurrencies is someone once described it as a financial revolution wrapped up in a get-rich-quick scheme. In the sense is many people come in on price cycles. I came in on a price cycle myself. It was an early one, luckily for me, but it was the first reason I'm in there is like, oh, people are look at the returns on that. That's amazing. That's what leads people in.
Yeah.
And what you talked about, 2017 brought a lot of money in. It was a boom and bust period. You had huge run up and then you had a huge bust period in 2017, 2018. But what that did is it brought in money, and it brought in a whole heap of programmers and app developers and coders and cryptographers, and they were now funded to take crypto to the next level. So in the early days, you had the original cypherpunks who were self-funded geeks, and then you had the price boom, which created a few sort of Bitcoin, original gangsters, they call them, people who made a lot of money, like Roger Ver, people who pumped money back into the system. Then in 2017, you got a heap of capital coming in that's then funded this human capital. Now that investment is paying off now in this current cycle we're in. In this cycle, what's interesting is, and I see this from some of my contacts, a guy I know had an option to join JP Morgan or a crypto startup, and he joined the crypto startup. There's people, young people especially, making that decision that old Goldman Sachs, JP Morgan route is not the route to go anymore. It's better to go for an early stage venture play where you get some equity in some sort of crypto startup. And that's not the technology people, that's the financial people. So I think you're seeing the what you talked about there about the disintermediation of value. It's like Mark Andreessen, a famous venture capitalist, said that software was going to eat the world, meaning that software would come into different industries and basically strip value out. And it did that. Retail is the big one. Amazon obviously did that for retail. It's happening in banking, a basic level, but now it's going to happen to money at a fundamental level. And as value gets stripped out from all these middlemen roles that aren't needed, that value has to go somewhere. And it might not be all the value, it might just be a part of it. But that value then comes in the cryptocurrency system, goes to protocol owners, who are people who own individual cryptocurrencies associated with that project. So a big one that people are probably familiar with is Ethereum. Ethereum is probably the leading smart contract-based cryptocurrency there, and most of the developer community build on Ethereum. And right now, as we're discussing this, Ethereum's going through a bit of a price surge. I think it's about a third the value of Bitcoin, but some people are saying it could even catch up with Bitcoin. And that's because Ethereum's actually it's starting to have a very, what I would call a tangible way of valuing it, because it's got revenue flows, it's got value built on top. It's got the kind of stuff that the traditional finance industry can actually say, hey, this is not just airy-fairy money. This is fundamental value drivers that we can track and metrics we can look at, and income and value built on it, and on all these other sort of financial metrics. And that's the stage we're getting to now. But the amazing thing from my perspective is it's a huge opportunity, but it's the only opportunity in my lifetime where anyone could have front run it. Anyone could have got in at any point before I did, after I did, and still be in the money, which is great. But the important thing to realize now about it all is that it's not going away either. Like, it's not this cycle, which could will inevitably have a bit where everyone gets too excited and it will have a correction. It's not, none of these cycles ever spells the end. They're what you call price discovery, trying to work out, are we too far ahead of the adoption curve yet, or are we on track, or are we too much below? And that's where you'll get the price rises in individual cryptocurrencies. And the hard thing as a trader and investor in this space for me is trying to work out, there's so many good projects to look at, is trying to allocate your scarce capital to the right ones and try and work out a method for doing that. So that's that takes up most of my days, trying to look at projects and seeing what's happening on that front. But it's something I find fascinating. So it's a labor of love. So it's good.
Well, I guess it's a point that we can maybe end on, purely because there is so much to look at with this unfolding system. And I think it's fair to say that it's still very early days. It's experimental. There's a revolution going on, and it's something that we want to follow. We want to help explain. And for readers, anyone who's interested in how this system is unfolding, I urge you to join us on this journey, and we'll hopefully make it as easy to follow as possible. So, Ryan, thanks for joining us today, mate, and helping to make all that a little bit clearer. And look forward to working with you on this project.
All right, sounds good. Cheers, Greg.
See you, everybody.